Hi, and welcome to the Trading Bell Show. Finance bill conversations ongoing, and we are right here on the Trading Bell Show as well, highlighting some of the comments from some of the industry sector leaders that had tabled some of their concerns, if we may say, to the committee. And joining us in this conversation is Fred Mburu. He's the Chief Executive at the Fund Managers Association. And of course, they also had their moments with parliamentarians and they had their ailing and concerns as well. And Fred, first of all, thank you so much for joining me. Karibu sana.
Thank you, Maina.
Excellent. I know you were not able at the time of this recording to make it here because of the protests that were out there, but thank you so much as well for joining us online. And there's a lot of concerns, but I wanted to just directly get to know from your end. When you were airing your concerns, what are some of the things that you brought to the table to the committee?
Yeah, thank you, Maina. Yes, I think like all other responsible stakeholders, we got the opportunity to engage Parliament on the proposed Finance Bill 2024. A couple of issues arose for us which we thought were going to be a bit problematic. I think just to speak to a few of them, one was around introduction of 5% withholding tax on interest earned on certain securities. Here I'm talking about government treasuries. There was also a proposal around a 5% withholding tax on interest earned on green bonds. But I think one of the more contentious one was one that sought to introduce VAT on financial services. So those three were going to be a bit problematic. I think one that we did not see elaborated in the bill was around the real estate investment trusts, where we were hoping to see progress there, whereby if one wanted to transfer properties into a REITs, then stamp duty exemption is necessary. So that has not been quite addressed.
Okay, so earlier on I spoke to the Kenya Bankers Association acting CEO, and he had some good news on his end. I think the VAT was scrapped out. Rates feel a bit pained off. I don't know whether there's anything else on your proposals that went through or some that did not. Do you have some highlights on that?
Yeah, so some highlights about some of the positive outcomes of our engagement is the withholding tax component was dropped, so we are pleased about that. I think other elements within the bill which are worth noting is increased contributions towards pension funds, deductible tax allowable contributions towards pension funds. That has been increased from 20,000 shillings a month to 30,000 shillings a month. So that is positive. Still on the pension fund space, again, we have seen incentives in terms of withdrawals. When one leaves a pension scheme, lump sums, payments, benefits out of pension funds, then that has been expanded subject to certain conditions. So that is positive. So certain positive snippets within the bill.
So let's talk about looking forward and the future of what you're looking at now as based on your priorities and advocacy work. What policies are you looking at to support the growth and sustainability of your industry?
I think as a Fund Managers Association, we look at it more broadly, more within the broader capital market space. Obviously, if the capital markets succeeds, then everybody, all stakeholders, of which we are key stakeholders in this market, do stand to benefit. Again, our members have about 1.6 trillion shillings of investments within the capital market. So a success in the broader capital markets is a success for our association and our membership.
Okay. Now, viewers, we're going to take a quick short break. We'll be right back with the Chief Executive Fund Managers Association. What we want to talk about is now getting to understand, by the way, who are they and what do they do? I know I just jumped into the concerns they had and just much more. So keep it right there. We'll be right back. Welcome back to the Trading Bell. We are speaking to Fred Mburu, the Chief Executive of the Fund Managers Association. Of course, he has expressed some of the pain points they had. Of course, some of them went through and some as they still hope to keep advocating for them, especially on the rate side. Now, moving on, Mburu, if you could kindly help our audiences understand Fund Managers Association. Why do you exist and what's your core mandate quickly if you can?
Okay, FMA, which is a Fund Managers Association, is a trade association of willing members. Our members are licensed fund managers in Kenya, licensed by the Capital Markets Authority. Our core mandate is really to promote ethical standards within our membership, of course. We also look after the interests of our members and also engage regulators and policy makers to ensure that, that the environment is conducive for investments and for the practice of fund management.
Yeah, excellent. And I think just for the sake of our viewers, again, maybe you could correct me if I'm wrong on this. Some of these assets is what we see. It's the monies, especially from, savings from people. Some of them are young, others are looking at retirement, all those kind of things. And these are the institutions that manage that. And he represents all those associations. Right, Fred?
Yeah, correct, Maina. Yes, yes, we do manage assets on behalf of pension schemes, and also on behalf of collective investment schemes, which I think is better known as unit trusts. So between those two buckets of investments, we control about 1.7, 1.8 trillion shillings, which we then deploy into the capital markets to generate a return for the underlying investor.
Excellent. I wanted us to give an example, for example, because you speak a lot with regulators, the Capital Markets Authority, the Retirement Benefits Authority, and the likes. I wanted you to give the viewers an example of some of the advocacy work that you have done, maybe one example or so they can understand and appreciate the role that you play.
I think, when one speaks about advocacy, a lot of these things do take time to actualize. So it's a constant engagement with both regulators and policymakers. But directly to your question, in terms of the successes, recent successes that we have seen coming out of the finance bill, is this increase in pension allowable contributions from 20,000 to 30,000 shillings a month, as I mentioned earlier, and also the issue around benefits. When that money becomes payable at the end of working period, then that has been expanded in terms of how much you can cash out without being subjected to tax.
Okay, thank you so much for that. So I wanted you to as well just elaborate on your core objective of the Fund Managers Association and how they guide activities and initiatives when we talk about FMAs.
Yeah, our core objective is to ensure that those practitioners within this market, those licensed practitioners, have got a voice, first of all, and that voice is through the association. We then ensure that their work is done in an ethical and highly professional manner, and over and above that, we engage regulators to also ensure that the environment for both practitioners and investing public is then appropriate for us to discharge our mandate.
Excellent. I'm curious to ask you, I feel like you handle quite a sensitive docket because a lot of these funds sometimes are, as we said, retirement cash for some of the investors. So what are your key challenges? Of course, we have addressed one, which is policies sometimes that pop up and you have to really keep pushing for this. Are there some of the key challenges that you face? You could name one or two?
Yeah, I think whenever you're managing money, there are always challenges. I think one primary one is return expectation. I think those who come and invest through fund managers have got certain expectation in terms of investment return. So we are continually having to educate and to, when onboarding clients, to explain the rationale behind risk and return. So we do have, like any other investment or in any other investment house, there are always difficult periods, there are always some good periods. Investment and returns can be volatile. I think a good example is 2023, where we had a sharp spike in interest rates that did dent the return on certain portfolios. So it's about constant engagement with our clients to ensure that they understand, how these returns are generated and what we do to mitigate risks emanating from those returns. I think the second part is availability of investable asset classes. I think in this part of the world, not so developed, but quickly evolving. We do have limited investment options, but we are hopeful that in the course of time, as the markets evolve, that we will have more options that will enable us to diversify and manage risks on investments.
All right. Now, the investment landscape keeps changing, as we can see. I mean, new products coming up here and there. And we have seen, yes, a shift sometimes from the old instruments that are fond of the bones and everything else. And I'm sure one of the key things that you're always thinking is how to be innovative to give the best returns to your, customers or the portfolios that you manage. So are there some in the offering that you're looking at, some of the innovations that you are thinking about embracing?
Yeah, I think talking about innovations, I think I would like to answer that in two aspects. One is innovation around, technology as an enabler. And the second bit is about innovation in terms of investment offering. I think on the technology side, what we are seeing from our members, fund managers, is the embracement, they are embracing digitalization, where more often now you are finding, for example, on the retail space, to be able to invest in a unit trust, a lot of members have then, rolled out applications that enable, that make it very easy for any retail investor just to access that app and be able to participate in the unit trust space. On the investment side, yes, perhaps an issue of, we've always invested in the traditional asset classes, your government bonds, your small universe of listed equities on the NSC. But increasingly, we are seeing our members looking at alternative investments as well as impact investments. So we will see that coming in terms of members trying to diversify their investments in order to gain that extra return that is so desirable for underlying clients.
Okay. Maybe as we come to a close of this conversation, I would want to ask a two-part question. First of all, I know you have already sat on the seat and you're still progressing on. I wanted to ask you, what is your vision for the Fund Managers Association? I would want to ask you that question as you tell us about your growth plans, especially on matters, development of new products in your sector. What would you end with this conversation?
I think, you are right. I've been on this role just for close to 6 months now. I think not new, because I am a former practitioner, so I do understand the responsibilities of this role. But I think from an FMA perspective, our main objective is to make ourselves known out there. I think when you go out in the public, perhaps FMA does not ring a bell to many people. So one of my core responsibilities is to make sure that I amplify the visibility of FMA, fund managers that provide a very essential service to this market, so that when you think about investments, you're thinking about professionals who actually carry out that role, and those professionals are members of the FMA.
Okay. What about you as a person? What's your vision?
As an individual, I think as I said earlier, having spent some time in the industry and now coming to serve under this umbrella, my vision is to see the association grow and evolve, eventually to a SRO, a self-regulatory organization. I think I will have done my best if I can move FMA several steps ahead towards becoming a self-regulatory organization. And by that I mean it will be an association where members voluntarily join, and we will develop professional and ethical standards within the association that guide the entire membership. Eventually, then that would mean that before CMA or RBA license you to become a fund manager, then they will perhaps look up to us as FMA then to give that nod of approval that that this member is of good standing and has met certain code of ethics that are prescribed by FMA.
Thank you so much for your time, Fred.
Thank you, Maina.
And we certainly wish you well at FMA. Thank you so much for your time, viewers. We want to leave you right now with the markets, and of course, let's just wait and see how things just turn out. And thank you so much for your time. Bye-bye.